The CPF Life and Retirement Sum Scheme are two key retirement plans in Singapore. But which one is better for you? By the end of this video, you'll know precisely how each scheme works, their key differences, and which one best suits your retirement. Hi, I'm Fer from Dollar Bureau, a personal finance platform that talks about insurance, investments, and financial planning. Let's start with what is CPF Life. CPF Life is Singapore's national annuity scheme designed to provide monthly payouts for life once you reach 65. This is a big deal because people are living longer than ever. And without CPF Life, there's a risk that you might outlive your savings. Now, CPF Life isn't a one-size-fits-all solution. There are three different plans you can choose from. The first one is the standard plan. This plan offers higher monthly payouts but leaves less for your family when you pass on. Next is the basic plan. You get lower payouts but more of your remaining CPF savings will be passed down to your beneficiaries. And the last one is the escalating plan that starts with lower payouts but increase by 2% yearly to keep up with inflation. By the way, if you want a full breakdown of the CPF Life, how it works, how to maximize your payouts, and which plan you should choose, I covered it in another video and I'll add it somewhere on the screen, so be sure to check it out. Now, CPF Life is just one option. What if you don't qualify for it, or maybe you're on a different scheme? That's where the retirement sum scheme comes in. Let's talk about it. What is the retirement sum scheme, also known as the RSS? The RSS is the older retirement payout scheme, which is just basically the older version of the CPF Life, who is mainly for people who were born before 1958, have less than $60,000 in their CPF RA by 65, or are non-Singaporeans or non-PRs who are not qualified for CPF Life. The biggest difference between the two is that the RSS does not provide lifelong payouts. Instead, your monthly payouts continue until your CPF savings run out or until you turn 90, whichever comes first. This means that you risk running out of money before the end of your retirement, especially if you live beyond 90 or didn't save enough in CPF. The RSS was the default before CPF Life was introduced, and now CPF Life is the preferred option for most Singaporeans just because it guarantees a lifelong income. So, how exactly do these two schemes compare and which one might be better for you? Let's break it down. As mentioned, with CPF Life, you get monthly payouts for as long as you live, and that's actually the key benefit. No matter how long you live, your CPF Life payments won't stop. With the RSS, you only receive payouts until your CPF savings are depleted or until you turn 90. If you live beyond that, you could run out of funds. Another significant difference is the monthly payout amounts. CPF Life generally offers higher payouts than the retirement sum scheme because it's designed as a pooled annuity system. Both schemes start paying out at the age of 65 and both benefit from CPF's interest rates of up to 4% per year plus additional interest for those aged 55 and above. However, one more key difference is what happens when you pass on. So with CPF Life, any remaining CPF Life premiums, which is the amount you initially contributed, is given to your beneficiaries. However, the interest earned is not passed down. It's kept in the CPF Life Fund to help sustain the scheme for all retirees. With RSS, what's ever left in your CPF retirement account, including all interest earned, is entirely given to your beneficiaries. If living more for your family is a priority, then the RSS might seem more appealing. However, CPF Life ensures that you never run out of money while being alive, which I think is much more critical for financial security. And hey, you can always opt for the basic CPF Life plan if you want to live more for your family. And that's everything about CPF Life and the retirement sum scheme. It all comes down to what works best for you. CPF Life is the way to go if you prefer a guaranteed lifelong payout. However, if you're on the retirement sum scheme, you must be mindful of how long your savings will last. Payout stops once the funds run out or until you turn 90. Either way, planning is key to ensuring you have enough for a comfortable retirement. If you're unsure which option best suits you, you can always have a chat with one of our friendly financial advisors. I've left a link down in the description below. It's free and it can help you figure out the best plan for your retirement goals. And don't forget, if you want a deeper dive into the CPF Life, check out my other video. I'll link it here on the screen. If you enjoyed this video, don't forget to like, share, and subscribe for more practical financial tips. Thanks for watching, and I'll see you in the next video.